Hello everyone and welcome back to another video. It's been like 2 weeks, but I'm going to be releasing quite a few videos back to back to back to back. So please do subscribe. I see everyone that subscribes and I appreciate it so much. I am trying to hit 1,000 subscribers within the next 2 months. I would really like it by June 1st, let's say, or the middle to late June. Sometime in that time frame. So anything helps. If you subscribe, if you like these videos, if you enjoy or get anything out of it, if it helps, let me know. And again, please do subscribe. So today we're going to talk about Chipotle's stock. I love Chipotle, but recently I feel like they've become a little bit of a ripoff. They don't give you as much food as they used to. The lines are packed. I mean, mobile pickup order, I literally waited an hour. I stood an hour in the restaurant, and it was such a negative experience because, I could have literally just stood in line rather than, mobile order, and I would have left the restaurant within a half hour to 40 minutes less than what I waited. I would have only waited about 20 minutes in line because Chipotle is not very organized when it comes to their whole new system of online ordering. They have the same people on the assembly line making mobile orders as they do for people that walk up trying to buy their meal. And that is just very inefficient and unorganized. Like I said, I waited an hour. This was about a month ago. I waited an hour in basically a queue or a line standing at the mobile pickup order shelf because Chipotle had the assembly line workers making food for the mobile orders at the same time as the people that walked up. And the line in the restaurant was packed too, like the line for people not picking up mobile orders. So anyway, I don't really think Chipotle is worth it going any more there to eat, but their stock sure is worth it. And let's get into it. So at the end of this, I'm going to go over a portfolio of, Chipotle, and if you had invested in it $10,000 at its IPO, what would have happened? And you're going to see 3 down years, and I'm going to get into that right now to start out the video. Chipotle in 2015 had an E. coli scandal. And you can even see right here this Business Insider article from 2018. It says Chipotle hasn't overcome E. coli fears. Basically, from 2015 all the way through 2017, there were, some E. coli outbreaks, and it just impacted the company tremendously. And you're going to see a return on investment is pretty weak considering what it could have been without those down years between 2015 and 2017. It makes a huge impact, and if you had just started investing in Chipotle in 2018, once the restaurants returned back to normal, you would have seen an absolutely crazy amount of growth, and we'll actually get into that as well, what would have happened. But anyway, this is just to start out. This is just a footnote to kind of let you know about what happened between 2015 to 2017 with their E. coli disaster. So let's get into some forecasting of Chipotle. As of April 23rd, Friday, April 23rd, Chipotle closed at $1,468 a share. And it's basically a moderate buy based on 26 analyst ratings. 18 out of the 26 say that this is a buy. And there is a let's just say a 14% upside from where it is right now. Most analysts predict that it could, the median price target is about $16.70. And stock analysis, this again is one of the rare, if you look at my other videos, rare stocks that actually does hit a 10 on the outperform. They just recently unleashed a new menu item, which is a quesadilla, and they did have cauliflower rice added. They're adding new menu items, and those menu items are premiums. As far as like cauliflower rice, I did try the cauliflower rice and it sucks. It's not very good. I don't like it. I just thought like it was very bland tasting, and it just, I don't know, it might have been healthier, but I don't know, the rice just tastes a lot better. But they are coming out with new products, so they definitely have a lot going for them. In 2020, Chipotle was impacted by the pandemic. So, they didn't have that much of revenue growth top line between 2019 and 2020 compared to, you see between 2018 and 2019. 2019 was their, best year by far at that time, and it blew everything out of the water. And it really, goes to show that the pandemic can affect a fast casual restaurant like Chipotle. They were impacted too. And if you actually see what I was talking about before with the E. coli between 2015 and 2017, you see Chipotle had pretty strong numbers in 2015, then it really dipped pretty badly, and then it did go up, but not nearly as recovered as 2015. In 2018, they definitely did a lot better, and then 2019, like I said, best year by far, and then 2020, pandemic happened, not that great of an increase. Their net income obviously is much higher than in years past, not nearly as much as 2015. And 2016, it looks like they barely eked out a profit, which is, again, because of the E. coli stuff. But either way, they are a profitable company, and we should see that to grow more. With the balance sheet, this is a good sign. This is a good sign to see that they have about $600 million in cash on hand, and that is it's a growing part of the balance sheet is their cash. And their total current assets is about 1.4 billion versus total current liabilities of about 822 million. So that's strong. It's not bad. That's pretty good for a restaurant. Let's give it to them. Current assets, so working capital is positive. And for a restaurant, that's actually really hard. That's not an easy thing to do, is have positive working capital. So they have better current assets than they do better current liabilities. And their total long-term debt, Chipotle has no long-term debt. Let's give them a round of applause for that. Whoever the CFO is, good for you. You're in a restaurant and you have no debt. Wow, that's incredible. That's a great, great thing, and this is where it's kind of an outlier as far as other fast casual restaurants is I think Chipotle might be the only one that does not have debt. Correct me if I'm wrong, feel free to comment below. Anyway, and total liabilities is about 3.9 billion versus total assets of about 5.9 billion. Again, very strong in the assets versus liabilities overall categories. Now let's check out the cash flow statement. And the cash flow statement, again, we always start out with net income at the top. And as we go down, we can actually see that they don't really buy shares back. This is something that could definitely make, if they just bought back a little bit more of their shares out of their cash position, because again, they have no debt, they're not paying interest, they're not trying to actively finance debt and rework it. I just think that they could probably buy back around $100 million a year worth of shares, and that'll again make the share price go up. If you're an investor in Chipotle, you do want to see this go up. Obviously, you want to see their cash pile grow, but you want to see that go up. And we can also see that, again, there is no long-term debt issuances or repayments. There's nothing like that. So in terms of, the change in cash equivalents, it's pretty good. They're cash flow positive. They've been cash flow positive the last 4 years. So that's a good sign. And if we look at a portfolio of Chipotle, if you had invested $10,000 in Chipotle, you would basically see, as far as this is showing results from January 2007, but they did go public in February 2006. But since 2007, basically, the start of 2007, your Chipotle ROI, return on investment, would have been, if you invested $10,000, $249,000. Well, that's a 25% compound annual growth rate, and again, this is very disappointing based on the down years, which we'll get into next, from the E. coli outbreak, because this could have been way more. This is a super rare kind of fast casual restaurant. It's almost like it's in its own category, like a Shake Shack kind of thing. And this final balance is pretty low when you look at, again, the down years. So what we'll do right now is we'll just look at the annual returns. So if you look at the annual returns, you can see like some pretty. This looks like a down year in 2008, probably due to the financial crisis. But if we keep going, we can kind of see that it's pretty steady and it's not that bad of a loss. And there's mostly double-digit growth, high double-digit growth. But then we see 2015, and this is again where three complete down years in the 20%. This is almost 30% in 2015 alone. So your investment dipped huge. If you were invested at the IPO, $10,000, by 2014, you were on top of the world. You had $120,000 after initially investing 10,000. But then you saw that go down exponentially to 50,000, more than cut in half by like 55, 60%. That is that is absurd. You would be crying and screaming because you're like, this shouldn't happen with this kind of thing, with this kind of restaurant, this kind of company, this kind of business. But then if you started investing in 2018, you would have seen again high double-digit growth like in the early to mid years of Chipotle. So what we'll do next is we'll look at if you had invested in 2018. So let's say you were on the fence about Chipotle, and then you were like, oh, let's wait out the storm, and you heard no more cases of E. coli or E. coli outbreaks were happening. Well, what would happen if you had invested $10,000 then? And your 25% compound annual growth rate, if you just waited for the E. coli outbreak to stop, if you started investing in 2018, you would see a 63% compound annual growth rate. That's almost, that's a little bit over two. It's about 2.5 times more than what your initial investment would have started out as. So your $10,000 would be $49,000 after only about 3 years. That's pretty great. That is one thing that restaurants can get taken down absolutely, as we saw with Chipotle, by something like a health outbreak, a health scare, and that's not good for it. And it did weather it, and it did make it through, but that's not what you want to see. So anyway, if you guys like eating at Chipotle, if you don't like Chipotle, if you like the stock, if you're invested, let me know and comment down below. Thanks again for watching.